feeling completely lost looking at the Canadian housing market right now, you are not alone. For years, we were told the same story. Millions of new people coming to Canada, low interest rates, and real estate prices that would just go up forever. But welcome to Today 26, and that is no longer the case. Let's talk about what has happened, and later we will talk about what to expect for home values in the coming years. The government pulled the emergency brake on immigration. Developers have too much inventory that can't be sold. Some turn to renting instead of selling, but even the rental prices have come down. So now developers are literally walking away from building new homes. And depending on what postal code you live in, your house is either bleeding value or quietly making you rich. Today we are looking at the hard data for 2026. We'll cover the exact forecasts for home prices across the country and what the lack of new immigrants means for your rent and home value. And the surprising truth about what a Canadian house actually costs when you ignore Toronto and Vancouver. If you want to build wealth in Canada, you have to understand the tools available to you. On this channel, we explore the specific strategies like real estate and long-term investing that help you keep more of your money and grow it faster. Remember to like and subscribe so you don't miss our next video. We also have a free personal finance app at financiallywise.ai that gives you one place to track all your finances on the dashboard, like your budget, investment research with buy or sell recommendations, track your portfolio, track your savings and your goals, net worth, free financial calculators, and a free Financially Wise health score. This is a great way to help you plan your financially wise future. Bonus is there is a AI-powered financial coach that can help tailor recommendations to your specific situation. Of course, you should seek out a financial professional, but financiallywise.ai helps you manage things yourself. Let's get into it. Part 1, the immigration pivot and demand. Let's start with the biggest shockwave to hit the market, immigration. For the last few years, the math was simple. We were bringing in a record number of people, and we had nowhere to put them. That pushed rents and home prices to the moon. But the government has aggressively reversed course. To give our infrastructure time to breathe, the 2025-2027 immigration levels plan slashed permanent resident targets down to 380,000 for 2026, a 27% drop from original plans. They are capping temporary residents, like international students and temporary foreign workers, to less than 5% of the total population. So, how is this affecting the market? If you are a renter in a student-heavy city, you are finally seeing some relief as the rental market is noticeably cooling. On a macro level, the Parliamentary Budget Officer estimates these cuts will reduce Canada's projected housing gap in 2030 by a massive 45%. But before you expect home prices to freefall, we have to look at what the builders are doing. Part 2. Developers hitting the brakes, housing starts. You would think that with a housing shortage, developers would be building as fast as humanly possible. But according to the Canada Mortgage and Housing Corporation's CMHC 2026 forecast, they are actually packing up their tools. They say that new home construction is set to decline through 2028 as developers face high costs, weaker demand, and more unsold homes. Housing starts meaning new homes beginning construction are forecast to decline through 2028. In Ontario, CMHC predicts that sales will remain below the 10-year average due to ongoing affordability challenges. The Greater Toronto Area will lead this growth, while Southwestern Ontario and Outer Greater Golden Horseshoe will lag, and Ottawa is expected to stay steady. Here is what is expected for BC. Resale markets will show signs of recovery but remain below long-term averages. Housing starts will continue to slow down in 2026, with a more significant decline expected in 2027 to 2028. Lower condominium presale activity will limit new condominium construction over the next 3 years. Why? Because the math doesn't work for the builders anymore. Construction costs are sky high, and the pre-construction condo market is basically dead. Investors aren't buying pre-construction condos because the high interest rates mean the properties won't cash flow and they risk not being able to sell to buyers when the condos are completed. So, developers are focusing purely on finishing the buildings they already started with no other new developments planned. This means that while the immigration cuts reduce the demand for housing, the developers are simultaneously reducing the supply. It's a Mexican standoff, and it puts a very hard floor on how low prices can actually drop. Part 3, future projected values, the 2026 reset year. So, where are prices actually going? Real estate brokerages are calling 2026 a reset year. Nationally, aggregate home prices are forecast to creep up by a very modest 1% to around $823,000 by the end of the year. But remember, Canada is not one housing market. If you live in Toronto or Vancouver, the market is incredibly painful right now. Both cities are plagued by oversupply in the condo market and severe unaffordability. Forecasts expect prices in Vancouver to drop by about 3.5% and Toronto to drop by roughly 4.5% this year. But zoom out and it's a totally different country. Montreal is forecast to jump 5%. Calgary and Ottawa are also seeing modest 1.5% to 2% gains. London, Ontario, and Niagara also expected to see 2 to 3% growth. Saskatoon is expected to have an 8% growth in home values. Part 4, the truth about the average price, which brings us to the most misleading statistic in Canadian news, the average home price. As of early 2026, the national average home price is sitting around $665,000. It sounds terrifying for a first-time buyer, but here is the reality check. That number is heavily distorted by multi-million-dollar mansions in Vancouver and Toronto. When you remove the Greater Toronto Area and Greater Vancouver from the calculation, the national average price drops by well over $130,000. That puts the actual average home price for the rest of Canada closer to the low to mid $500,000s. Is that cheap? No. But it is a much more realistic picture of what a home costs in places like Edmonton, Winnipeg, Halifax, or secondary cities in Ontario and Quebec. What should you do? The truth about Canadian real estate in 2026 is that it is a market in transition. Demand is dropping because of immigration cuts, but supply is dropping because builders can't afford to build. If you are a buyer, this is the time to negotiate. With properties sitting on the market longer, especially condos in Ontario and BC, you actually have the power to ask for certain conditions, home inspections, and negotiate prices down. The frenzy is over, but don't wait for a 50% crash because the fundamental lack of new construction won't let it happen. Focus on your personal budget, ignore the national headlines, and study your local neighborhood's data. If you made it this far, hit that like button to help out the channel and let me know in the comments. What is the housing market like in your specific city right now? Are things selling or are they sitting? Subscribe for more data-driven deep dives, and I'll see you in the next one.